Now, meanwhile, we're counting down to market opening. We've got both Shailendra Bhatakar and Amrish Baliga with us this morning. Good to have you both. Let's look at the trade setup. Amrish, great chatting with you after a very long time. Let me
Yes,
first
Sabha.
let me first get your view on really how the Nifty is set up today. We've got lots of these global factors that we're tracking, and it's a little uncertain as to how they're likely to play out. What's going to be on your radar?
I think on Saturday evening there was a huge amount of panic, but after those clarifications, after that, some sort of a U-turn which happened, it may not be that bad. But yes, the IT stocks specifically could get affected. In fact, on Saturday, I was expecting these stocks to open about 10% lower, but post those clarifications, we are clearly seeing that they're opening a tad bit lower, 3 to 4% lower. I don't see a major cut because I mean the issue is not immediate. I think the issue is going to happen at least over the medium term. From that point of view, I think the IT stocks may not fall too much, and markets overall have been showing resilience, and this and the amount of liquidity which has been coming in has been supporting the markets. So I don't see much of a downside as far as overall markets are concerned. Maybe we could see some correction.
All right. Shail, let me bring you in as well. Of course, lots of conversation around how IT majors will manage to mitigate these costs and plan over the next 2 to 3 years in terms of, how this will minimize the impact on their P&L. But with regards to the kind of action we saw overnight on some of those ADRs, talk us through that and what it's indicating for some of the IT majors this morning.
Abha, clearly this is a reboot for the IT that we know over the last three and a half decades. Now a lot of work will be brought to India, and that essentially means better margins. But this is a knee jerk that we will see in today's trade. Infosys already down 3.7%. If you see the ADR on Friday, it lost 3.5%. And more importantly, the volume was phenomenal. 54.7 million Infosys ADRs were traded at about $16 a pop. That makes it $1 billion worth of transaction, and that's a negative downtick. And this is the volume that we've seen highest since 22nd October 2019.
Hold that thought. I'm coming right back to you. But I just want to pull up Infosys on opening trade. Let's pull up Infi. Let's pull up Wipro. Let's pull up TCS. Remember, these are the biggest weighted stocks on the index. So if we're seeing pressure on the index, it's going to be on the back of the action here. Infi is down 3%, as we just saw Shail talking about this pre-open ticks. The Nifty IT is down over 3% as well. Let's continue to pull out some of those counters, and then I will go back to Shail. Tech Mahindra actually has the largest exposure. That's why it's down almost 5%. It doesn't have too much offshore capacity there. We have had some brokerage calls come in talking about how companies will have time to plan and mitigate and offset those risks. But this is the immediate impact that we're seeing. BofA says that there is an EPS risk of 7 to 17% over 3 years coming in. We've also got highest impacted stocks like Tech Mahindra. Let's also pull up LTI Mindtree, Persistent. Take a look because some of these names will be highly impacted as well. And also pull up Infi and ADR as Infi and Wipro post all that ADR action. Infi continues to be about 3% lower as well. Down over 3% on the tech index. Shail, I'm going to come back to you on this to talk us through those numbers and volumes once again, because clearly this is where all the action is this morning.
Absolutely. 1, 2, 3, 4, 5, 6, 7, 8. Top 8 losers on NSE 500 today are tech stocks. Losses range between 2.5 to 5.6%. Abha, the knee jerk will be what we see in front of us. This will also pull down the Nifty. Look at the Nifty IT index. It's 3.5% lower. We've already lost 1,300 points because EBITDA, which is the operating profit of all these top 5 companies, TCS, Infosys, Wipro, HCL Tech and Tech Mahindra, will be down anywhere between 5 to 11% in FY26 because of higher visa costs. Next year, obviously, they will somehow absorb the impact, but the knee jerk is right there in front of us. You might see some moves coming in on the afternoon trade when people buy into deep value, but this is what is pain and pain is visible, and Nifty will also be down because 10% of Nifty is the IT stocks. Infosys itself has a 5 percentage point weightage in Nifty, and that's the reason why you see a 100-point downtick on the Nifty. Nothing to be worried about. We've had 3 weeks of gains. This is just a bit of profit booking. Abha.
Yes, nothing to worry about, so to say, but let's focus on those tech stocks a little deeper because we haven't seen them perform this year regardless. And some of these factors continue to, really keep a dark cloud when it comes to some of those tech majors. So, Amrish, I wanted to ask you about that because, tech used to be a darling of the market, but clearly things are somewhat changing. How are you viewing tech as an integral part of someone's portfolio at the moment?
No, see, end of the day, tech has a huge sort of exposure as far as Nifty is concerned. So you can't ignore tech. But then possibly in the last couple of quarters, I would say possibly the last 7, 8 quarters, people have reduced their position in tech. And still we are not seeing that silver lining as far as the earnings are concerned. We are not seeing a decent uptick. And even the order flows. Every quarter, we assume that possibly the next 2 quarters we could see that uptick, but that's not been happening. And on top of that, we have this adverse news which has come from US. So I think it'll take a while longer. So I would say that as of now, keep your tech exposure at the lowest. Maybe just about 5% of your portfolio could be in tech, which is lower than the weightage it has in the Nifty.
Okay.